Welcome back to the LPR Trading Group YouTube channel here. It's Dave again. I've got a quick video for you today on footprint charts versus your traditional candlestick charts. I do believe that anyone trading, especially the futures markets, should at least try and learn something about a footprint chart. Rather than just trading a basic candlestick chart, the footprint chart is going to give you so much more detail on the orders that are being contracted within each candle. You'll see every single tick value on a footprint chart. So you'll know what orders went through at each tick value. You'll be able to see buyer and seller presence, and you'll be able to gauge your trade a lot better using the footprint chart. I'm not saying completely get rid of candlestick charts, but I'll definitely add footprint charts to your arsenal. Enjoy the video. All right, let's jump right into this here. We're going to start talking about footprint charts and why they're so important versus our candlestick charts. I'm not saying you have to get rid of your candlestick charts, but I definitely suggest if you're trading the futures market, look into order flow, DOM, depth of market, plus footprint charts. It's going to give you a lot of additional information that you will likely be very happy about attaining once you learn how to read these and read the DOM. So these are my footprint charts. I use Quantower for my footprint charts. On Quantower, they call them cluster charts. Call them whatever you want. They give you the same information here. What I'm going to do is I'm going to dial into a candle here or a print. Okay, so I'll dial into this print right here. What this represents is 1 minute of price action. Now, I'm going to sort of break down this candle for everyone or this print for everyone. If we look on the inside between where all the numbers are, you'll see this red line and then you'll see this black line. This represents your traditional candlestick, okay? So what does this mean? On the previous bar or print here, we have a green candle that moves up and it pulls back and closes here, right? We close at the high of the body of the green candle. Next candle opens up right here and we actually push up. And then we move all the way down and we close down here. So you can still see your traditional candlestick within these footprints if you program them correctly, depending on what software you're using, yada, yada, yada. Let's talk about what a footprint chart means. Now, we're going to look at the column on the right-hand side here. So this column on the right-hand side represents participation at the market, at the offer, or the ask, okay? So this is people marketing in, buying the offer or the ask. This side right here is market participation to the bid. These are people marketing in on the bid. Now, because we know or we can see who's marketing in on either side of the trade here or the transaction, we can see where the aggression is being applied. Now, I want to give you an example here. I'm going to pull up a traditional candlestick chart. And if we look at the open here, this is today's open, September 6th, we look at the 930 candle right here. We get a push up, we get a push up, we get some topping tail, rejection, whatever candlestick retail traders call it, some topping tail, we get rejected and we just fizzle off all day, right? Now, we don't get much information there outside of, okay, we got a topping tail and it already played out. What do I do now? Where's my entry? Where's my stop? No one knows. When you're looking at footprints, in this exact same time frame here, we'll look at 930 and 931. These are the two candles we were looking at, and this is the breakdown that we get on footprints. So what do we see? We see a push up, that's our topping tail, and then we get rejected. Now, I've got some key things highlighted on my footprint chart. You'll see I have a couple numbers that are pink, some are yellow, some are green. These are imbalance ratios. The way we read these imbalance ratios and the way we read footprints to begin with are diagonally. So this is how you want to read your footprints. The market is a vertical auction and the bid always remains below the offer by one tick or more, okay? So if we're looking at this 97, when it was at the bid, was transacting with this 95. We go diagonally. 151 transacts with the 71, 215 was the bid, 241 was the offer. This is how we transact, okay? So now that we know that, once we get this drive on price, and then we push up a little more, We break a new high. What happens over this new high? This is interesting. And we had this area marked out. I did not take this trade this morning. Some members in the group did. We had this area marked out. What happens when we made a new high and we got into our HVC here? Well, right over the new high, we can see lots of volume comes in. We've got 534 contracts hit market, hit the bid at market. 410 hit the offer at the market. 445 hit the bid at market. 439 hit the offer. 127, 46, 12 at the offer at market. Well, to me, it looks like once we break out, a huge influx of volume comes in here. Sellers are responding. Buyers give up. It's super weak going through this high break, and we get an imbalance to the sell side. So if we're looking at the diagonal comparison between bids and offers, we look at the 445 versus the 127. This is greater than 3-to-1 sellers versus buyers, marketing the bid versus the offer. So right away, this is telling me buyers are weak. They tried to break through the highs with some strength and authority. Sellers responded. Buyers got weak and gave up, slowly started buying less and less contracts every tick value we moved up. This is a trade opportunity. Okay? Let's go through some more examples here. And I didn't put any examples together. I just want to sort of scroll through the day and see what's going on. We'll check this out right here. Okay. So now in this case, we've got a lot of these greens, yellows and greens, yellows, greens. Perfect. So what happened from, I suppose we could say, where this turned around, where we try to start reversing? Well, we start bottoming out here. And once we get to this bottom right here, there's not a lot of sellers participating. We don't see imbalances to the sell side diagonally. We don't see any imbalances on these candles to the sell side like we see up here. So sellers are starting to fizzle out at this moment, right? They're just saying, okay, we're not interested in selling down here. But who's interested in participating down here? Buyers, right? Right at the lows, we get imbalances to the buy side. Imbalances to the buy side, confirmed, we get a good push up, and we get many imbalances to the buy side. It's telling me that buyers are aggressively buying the offer. Now, as we continue to move up, they continue to buy the offer, right? The important part to note about this is as we move up higher and higher, these imbalances are rather weak. Remember we looked at that original sell imbalance and we had a 445 right off the open? These ones begin to get a lot smaller. Sellers aren't interested in this area. Buyers are just running through low liquidity blocks here and pushing price up. Now, this right here to me spells exhaustion. Why? What kind of buyer outside of bad retail is marketing in over 200 contracts within 3 ticks as prices flying up right here? It's likely some really bad retail doing this. So as soon as this really bad retail gets trapped, we expect a follow through off big buying like this, maybe a little pullback, hold, and then a follow through if we're actually strong. We're not. What do? We turn around, we completely reverse, and we start printing sell imbalances back to back to back to back to back to back to back. We print sell imbalances until we get back down to these lows. We can see volume picks up into the lows. Buyers trying to hold the lows, no luck. Big sell imbalances through the lows. Sellers are in control. Buyers are dead. They essentially used a lot of these buys up here from these bad retail buyers to tank this, stop them all out, and crush them and continue to move to the downside. Let's scroll through this a little bit more. I'll give you guys a perfect trade right here that was taken in the group. We establish a low here. We're holding higher lows. Very simple, right? Very simple technical stuff. We're holding higher lows. We push up. We get into this small consolidation range here. Okay, buyers are obviously in control. Bang, 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 bang. Lots of buy imbalances. And they're not small ones like we saw before. They're larger buy imbalances. 300s, 140s, 160s, 150s, right? They're big. These buyers really want it. 145s. They want it and they're getting it. So they push it up. What's supposed to happen? Little pullbacks. Buyers hold again and push price up. This is a perfect trade that a lot of the members took in the room. We try and break down, we can't, buyers come back in, they buy price up for value, and their trade gets confirmed when we get these large buy imbalances again to the upside. Large buy imbalances going into the breakout, however you want to draw it, and all these sellers get run over. Okay, continuation of these buy imbalances to the upside. What I want to tell you guys is if and when you get into footprint trading or order flow trading, do not solely rely on this. We use a market lawyer mindset. We have multiple pieces to a puzzle. For me, I've entered between 4 to 5 pieces of a puzzle before I get in any trade. If I only have 2 of the 5 pieces and I'm going to get in the trade, I get in the trade very small. Because at this point, I've only got 40% of my structure on the trade. So I get the trade very small. This is an additional piece of the puzzle that I would like for you guys to use. We use it every day in the chat room. I'll actually show you over here. I'll show you over here a bunch of pictures that I posted this trade right here, the one that we just talked about. Okay, we're posting footprints, a few HVC charts, talking about our ideas, talking about our areas, our levels, yada, yada, yada. This is a huge, huge, huge step forward in your trading journey, and I highly recommend you guys try it out. I know this video was short. It was improv. It was impromptu, whatever you want to call it. I just wanted to give you guys a glimpse of a footprint chart, how it works, and you guys let me know in the comments down below if it's something that you're going to add into your trading, or if you think it's absolutely useless and you want to keep trading candlesticks or whatever you're trading. I'm absolutely open to a discussion on this, and I'm willing to help anyone out who is looking for or needs help on these footprint type charts. Thanks a lot. Have a great night, guys.